All right, guys, another Sunday scan coming at you this time for October 11th and the week ahead. I hope you guys all had a great weekend. Last week was another one of those crazy weeks where we're seeing things that we haven't seen before. Like I said, last Sunday it was one of the most stressful weeks just because I did not want to leave my desk. I wanted to be there from 6 a.m. till literally 4 or 5 p.m. just in case something happened after hours. And, that's not my goal. That's not my goal every single day. My goal is to kind of trade two main names and move on and try to at least enjoy my day a little bit more than I have in past years. But then all of a sudden these couple trades every quarter sneak in there, and it's like I don't want to miss this major opportunity. So hopefully the warnings helped everybody on CEI. Obviously that was getting crazy overextended. We're having obviously a nice short squeeze, and then once the squeeze was gone, the bids were absolutely nowhere to be found. So went all the way down under $1 down to the high 80s, and unfortunately they put out a filing after hours, so it bounced there. I was so ready to buy the week open the next morning for the rebound, and that particular trade, CEI, reminded me of OTCs back in the day. We used to have all these promos, and they used to have these mailers, these glossy 8, 12-page type mailers that would be sent out to literally millions of people. And it would just kind of go up and up and up and up, and it got to the point where it's like, how much higher can it go? And it kept on going. And then as soon as it was done, I mean, there was just no bid. And it was very, very similar to the action on CEI. But the interesting part about that is because there's no bid, then they can absorb most of those shares back on the cheap. They just sold them at $3, $4, almost $5 a share. And then all of a sudden it's only $1. So now they've got double, triple, quadruple the money, and they can buy that many more shares, and they can do it again. Never as high, but as you saw, it went probably a lot further than you thought, especially the next day into the 240s. But we got an awesome opportunity on Friday. Couldn't have asked for a better gap up and fail. That just worked out perfectly. And so I think, after tomorrow, I think it's going to be probably off of radar. I tend to put things on radar when there's an edge, move in, move out, move on, right? And if you keep on going back to the well, because yeah, sure, it paid really well, but you also have to know kind of when that edge is done. And, there's certain days that you can trade, XXXL size on that. And then there's certain days that you can't. And once that volume starts to kind of fade off a little bit, it'll get more choppy and it'll be a little bit more dangerous to trade as much size as maybe you got away with this week. So one other good thing, I showed you guys the connection between DATS, DATS, and CEI and how they were trading pretty much in tandem. And they did the same exact thing until I think Friday, and DATS finally broke away. So we're going to have a nice trade there this week, I think, as well. It was a nice one on Friday. Got into the parabolic action, and it flushed into the VWAP and offered a pretty good opportunity. But after that, I left for the day and called it a week. So this week, heading to Vegas. So Thursday, I'll be landing in Vegas. I'm looking forward to meeting a lot of you guys, a lot of faces, new faces that I haven't met before. Ones that wanted to go last year, but then we didn't. We only did it virtually. And a lot of guys that are in the room, and ladies, that you've been around and you kind of have, you've got the alias, the screen name behind the person, but you never actually meet him. And there's a lot of good long-term relationships that I've created and other people have created by going to events like this. Traders for a Cause in the past, and you develop a different relationship with the people that you work with every single day. So I've been working out with Zach every single day that a lot of those guys are going. I've been just talking with a lot of traders. There's a lot of great assets in our community that I have never actually met. So I am looking forward to meeting people like that. For example, Divided Champ, great news guy. Just kind of came out of nowhere and one of the fastest and a young gun, really young kid. So I'm excited to meet him. He's been a huge asset to the IU community. So that's what it's all about for me. Obviously the excuse is to get together and do good at the same time. Usually we raise quite a bit of money for charity. So the selfish side is you get to meet all these guys that you work with every single day, and it's a very unique kind of career because you've got all these virtual friends. It's opposite of everybody that goes to a 9 to 5 where they've got maybe a potential cubicle or whatever the case may be, and you've got all these all these people that you see every single day. For us, it's you count your friends by your screens, I guess, and it's just all virtual friends. So it's nice to have these kind of events. Lastly, all the apparel, we have a link in there. All proceeds always go to Traders for a Cause. That's not something that we do to make money on. But I am matching all apparel all apparel sales into the event. So if you want any IU gear, if you want any of those shirts, there is a link in the description to check out what we have. We have a new shirt for Vegas. As you guys know, I'm big with eating well with Icon Meals. I'm big with Zach on Avidity Fitness on training, and I think that it all kind of comes together. Consistency all around is going to lead to better trading. So made a shirt instead of doing like 3 or 4 or 5 different shirts. We combined all into one, and I think it came out pretty good. Eddie Dunn, you left a comment. As you guys know, leave a comment, your key takeaway, leave the timestamp. Tell me what was an aha moment for you when I was talking, when I went over something, whatever it may be, and it helps me the following Sunday, maybe a talking point, or maybe something for the small videos that you see that we put out every single day. So I appreciate you, Eddie Dunn, for leaving a comment. I haven't seen that name before. Maybe you have, but it looked new, and so you've won the t-shirt for this week. And let's get right into the questions and right into this scan. I don't anticipate this one being very long because I took delivery of my boat finally. I got it right in time for winter, so I'm going to be able to ride it for a couple weeks, and then there's going to be ice. So every Sunday, for those of you guys that don't know, or usually like Saturday, I put out the question, if you guys have any questions for the video, to go ahead and just reply to me. And so usually I pick out a few key talking points that I think would benefit the trading community. And so that's what these 5 are for. I think there is 1, 2, 3, 4, 5. Yeah. So the first question came in: after becoming consistent, the best way to size up. And I think that this is a great question because, there are those traders that are just consistently grinding and grinding and grinding and grinding. And, that's great. There's nothing wrong with that. But, at some point, we trade because we're here, we're risking. We're risk takers, right? Educated risk takers. Our goal is to, outperform and find ways to do better and better and better, fine tune what we do best. And so I think the best way to size up, there's a couple different ways. One is, the same way we always talk about, find your A+ type setup. So what are you good at? Not me, not your friend, not your other friend, but what are you good at? Where do you consistently get it, understand it, and trade well, right? So a lot of times people make money on, I'll give you an example, even on like crypto, right? Dogecoin goes out. You know how many texts I got? Hey, should I buy Dogecoin? I know somebody that made a lot of money on it. And so people's, heads immediately go to, I need to do what they did. Yeah, but they just made all that money. So how are you going to get that same percentage, if you do the same thing? Probably not. I mean, I guess it's always possible. But the point is people always want to mimic somebody else. And so you need to find out what jives with your personality. Where do you find the most sense in the market? And really work on that. Fine tune, exploit, what you can out of that. And whether that is trading larger, which I don't always think is the answer. A lot of people think that just sizing up is just by trading bigger. But for me, there's only a couple trades per day that I actually want to really apply size and risk, and it's got to be a particular setup. So for me, I want to scale into that winner. And when it does what I expect, I need to size back down. If it does not do what I expect, I need to size back down. If it consolidates and it's not doing what I thought, when I thought, how I thought, I need to size down. But a lot of times you'll see me scale, scale, scale until we get that waterfall, and I'll immediately size back to a normal amount. That's one way that I like to size up. Another way is just understanding the best trade for you. And those particular trades, maybe that's where you exhibit the most risk. And so, there are times where there's an A+ setup that comes up on scan. Not so much tonight, but there are those, I call them, there's the magnitude of the trade setting up. And when that happens, I'm willing to take on more risk than I typically would, because I know that 80-90% of the time, that trade's going to work out in my favor, and it's going to be big. And so the key is just not stepping in front of it. And as long as you can do that, those are the ways that I personally like to size up. But I was actually having this conversation with Josh Cherniak this past weekend. We were chatting, and about a couple people that we know that were managing money, managing other people's money, and thinking that it's just going to be easier just to have more money to be able to do more things, and it's actually quite the contrary. In my impression, or my thoughts anyway. And there's a couple reasons for that. One is, I think you personally need to grow at the pace that you're growing to understand the new emotions that you're going to be facing, the new type of liquidity decisions that you're going to have to make. And if you just jump into a situation with a bunch more capital, you haven't learned these things. So I think that each step of the way, you hit roadblocks for a reason, and then you fix those holes in your foundation, in your process, whatever you want to call it. And then the next step up, you get through there, and then you go and you hit another roadblock, and then you fix that, and then you hit another roadblock, and then you fix that. And it's all, it's a structure. You're continually creating a stronger structure to get you from, point A to point B, C, D, all the way to Z, right? It's never ending. And to jump in with more size is, in my opinion, the wrong answer. A lot of times people have too much capital and they feel like they have to outperform or hit some benchmark or whatever the case may be. So my answer to that is always just go at your own pace. Understand that there's, it's out there for the taking. It's out there if you are passionate about it, if you are interested in really, getting to the next level, it's out there. And you have to apply yourself, but don't rush it. Next one is managing emotions a matter of screen time and risk management. I catch myself more numb to my losses than I am to my wins. And how do I start getting myself to the point where I'm just saying next play instead of too up or down emotionally? So I think this is a problem that a lot of people do. I think that it's much easier to hold on to a loser for whatever reason, right? And it's easier to add to a loser than it is to add to a winner. Adding to a winner makes sense. Adding to a loser means you're increasing your risk when you're the most wrong. And so I think that it's a mixture of everything. Screen time for sure, and risk management. Look, you went into a trade with a plan, so forget emotions. Stick to the plan, and if you can do that, then I think that you're going to get a lot further, because there are going to be times where you're like, I knew I should have held it. It worked out. But the time that you don't, and you end up giving back a month, 2 months, a quarter, it's going to be worth it for all those other times that you were upset that you stopped out, that it would have worked out anyway. So never be upset about stopping out. Always understand you can always get back in. But as long as you're trading a process and you're respecting risk management, it will help keep emotions in check. If you have emotions coming in there, then size down until you get more confident and you build up your confidence a little bit more. I think that's super important. And the big reason I think for for that is, you need to be confident in the play. Otherwise, you're going to be thinking about exiting before you even enter, right? You get in and you're already, on the exit side. The plays should be working for you. Think more macro rather than always like in, out, in, out, in, out, in, out. Think about, where could this trade go? And if you're taking a trade and there's 10 cents risk and a potential of a 10-cent breakout, then why are you trading it? So, I think the next mentality, next play is the best way to go. A lot of times we stay in trades too long, too. Even if they're a loser, or even if you're not, it's sideways. Think about why you went in the trade, what your game plan was. And if it's not doing what you thought, move on. Find another one. There's plenty right now. Next question was, thanks for taking the time. One of the best traders out there, you always speak about looking left, previous resistance, but are these the same levels that longs look for breakouts? What gives you confidence that the stock will go in either one of the directions? So I think that looking left was a huge benefit on something like CEI. Same thing, DATS. They were following VWAP the entire time, and they were basically basing it at the prior levels of support every time. So, for example, it's breaking out, pulls back, flushes out. Pulls back, flushes out. And it's always keeping that base. So that keeps you away from staying stubborn on the short side. That keeps you away from even shorting it in the first place. And then as you saw, CEI, we talked about 285 being the level. So if you go back and check out the 285 level on the CEI breakout, you'll see that every time that it flushed the first couple times, it based there. So then when it finally broke that, you saw the bids completely go away. So looking left can be a great level to get long versus prior resistance. First prior support, or a VWAP level, or whatever you want to use, as long as you have a plan. A lot of people do use those levels as a guide for a long. Otherwise, for a short, I don't want to anticipate shorts. I'm over trying to find the top. I'm over trying to size in, and hope that it works out. I don't do that. What I'm interested in is waiting for people to get on the wrong side above that level, and then when that level starts to confirm that it's the top, I know that there's going to be a lot of inventory that just bought, that's exhausted out, and now it's going to come to the bid side. That's what I care about. Let everybody else figure out the top. Let everybody else be playing the breakout and buying the breakout. But let it confirm. Let it come back. Let it break down. It's fine to trade the front side of that move if you're good with that, if you respect the trend. But I call those proactive covers. So you should assume that each time it comes back and tests that, it holds. So for me, I find it best if I have some covers there ready to go, because what I notice that I do sometimes is it's a fast flush and you get excited and you're like, all right, here we go. It's coming in, and then bump right back up. Had I just left the orders in, I'd be out. But instead, P&L goes crazy. It's about to fall. It's about to completely unwind, and then it just bounces, right? And so where we'd be not emotionally covering, because that was our line, that was our plan, emotions take over and say, hey, it's game time, let's go. And then it bounces back up and you're frustrated. So that's a good way that I use looking left levels. And then look on the daily chart. I don't like to trade stocks that are stuck in the channel, a daily channel or an intraday channel. I feel like you're going to get chopped out. So I always like to wait for the outlier moves, wait for exhaustion over those levels, wait for exhaustion under those levels. Next one was, how are you implementing unusual option activity to your trading? I've seen you more aware to options lately. Yes, so I think on the big moves, I do pay attention to them. Not personally. I have somebody that is very good at this. I have somebody that watches the option flow every single day. This is not just you see swipes, you see sweeps, you see this, you see that, and like it's going to go that direction. It's not that at all. There's a lot of noise that's created. There's a lot of sweeps that are just kind of done to get people excited about, oh, maybe this is going to go crazy. And then people see that, other people repeat it, other services announce it, and then, you know, it starts to go. This is bigger money, not small sweeps here and there. And so as you've seen, it's not always to the minute, it's not always to the hour. But if you think from a macro perspective, in the next 12 hours, they've been pretty dead on with some of these moves. So that is just from a friend that is very good at this. It's not a service or anything. He subscribes to different services to get this information. But at the end of the day, it's like me and you looking at a scanner. You know, all these names might come up on scanners, but why do you pick the one that you're trading? You know, there's that personal selection, cherry picking of which ones you think have the best chance to doing what you saw or see or think. And it's that same process that he applies to, you know, options. And, you know, he's just very good at it. He's been doing it a very long time. So anyway, that's that for the first part, and I will get right into the scan for tomorrow and the week ahead. All right, guys, so this is the part of scan where I go over what I'm looking to trade for the week ahead. Once again, I'm not a financial advisor. This is not buy or sell recommendations. It's for educational and informational purposes only. So if you're not okay with that, shut the video off. If you're okay with that and you're interested in understanding what to me makes a good trade, what I'm looking to potentially participate in, then by all means continue, enjoy. Leave your key takeaway in the comment section. Leave a like, please. That's very good for the algorithm so that more people can see it. Now, CCXI. Pretty wild one. I definitely minimized it. This was a perfect trade plan from pre-market. And we went over at 8:50 a.m. and my goal was let it kind of come in to 9:45, 10 a.m. and trap. And then I was looking for the reversal. I got long. We had some great alerts on the point targets being increased from like 50s to 100s, 110s, whatever it was. There was like 4 of them, and it just kept on going and going and going. I got long at pretty much near the lows. I was long here, it rebounded, and it stayed heavy. So like I said in the room, you know, I was moving on from that particular trade just because I felt like it should have been thinned up by then. Thinned up meaning, you know, it's thick. It's coming down. There's a lot of volume, a lot of pressure, a lot of sellers. And then as it reverses, it should be a lot more jumpy, right? Where instead of being 1, 2, 5 cent spreads, it should kind of be 10, 20, 30 cent type spreads where it pops right up. Didn't do that. So I wanted to go ahead and move on. And so that's what I did. I waited for it to flush out again and start to base, and I started to participate long. We got some help from the point targets. Got long, held view up, worked out perfect, but I was just selling too much too soon. And I had every intention to hold. And the reason for that is because there's 4 things that are happening in the morning. And so you've got gap sellers, right? So just people that maybe bought the news and got excited about it and, you know, anticipated it retail. You know, maybe they're not bag holders, but they got a huge 50 to 100% gap overnight. You've got bag holders. You've got people that just got bailed out, right? So they finally get this chance to get out. So they're selling. So you've got 2 types of sellers so far. Then you've got potential paper. Just say they're hitting an ATM. Say they're selling some sort of paper. You might have pressure from that, from the company. And the 4th would be the short seller. So you've got 4 types of sellers. Pretty much the first 2 are similar. You know, longs, you know, getting out. But one being maybe the person that just made a quick double. 2 being the one that gets the bailout. 3 being pressure from the company. 4 being short sellers. When it reverses, if it stays thick, there's a good chance it's going to continue lower. When it reverses, if it stays thin, there's a good chance that people are caught off guard. I've been on the wrong side many times on this. I've learned. And I learned that these things can turn on a dime, go up $1, go up another $1. And then it takes very good risk management not to screw that up. So now I've learned to get long on these types of trades. So I was there. I did minimize it. I shoulda, woulda, coulda, whatever. It's okay. Got a nice piece of this parabolic move into the close. Covered. Once again, I had a cover in there. This was a perfectly executed cover because it did go a little bit lower, and I probably would have pulled that bid most of the time. And you can see it went right back up. So if I was thinking, oh, it's staying heavy, maybe it'll go another buck or two. Non-emotionally, I had already picked that level as a key spot where I wanted to go ahead and lock in. I wanted to be proactive with the cover. And as it flushes out, you know, I'm covering, I'm like, oh man, this thing looks like it's gonna go lower. I'm not touching it, not touching it. And it ends up going lower, like 50 cents lower. So I was bummed for like a minute or two, and then bam, right back up to the highs. That's why I don't change my plans. That's why I don't switch mid-trade. I could always re-add if I wanted to. That saved me a lot because I was sized in on that trade. So I don't have a bias yet. You know, are we going to gap up? I think we're either going to gap up $2 or gap down $2. And then I would make a plan based on that 8:50 a.m. on the broadcast tomorrow morning. But I think we'll have another good trade. If it were to open weak, I would probably be looking versus this level over here, 36s. You know, something 36, 37 base for that rally towards 40, 42, something like that. Potentially even higher. If it gaps over this prior level, which, you know, the highs of the day, 40, 40, 50, something like that. If it gaps over that, I'd be looking for a shove and then pull back. So I want to be prepared both ways for +2, -2, but, you know, I don't have a bias going in. That's nice breakout on Friday. This one finally, like I said, it pulled away. I showed you guys proof that, you know, how it was trading in tandem with CEI, even to the last pullback day. And so anyway, it finally broke apart, and it had a nice hold. You can see that it held support here. It held support here. This is sort of the looking left that I was talking about. You can see over here, 1080s was the level that I posted in the room. You know, don't even consider fading it unless it breaks that 1080s. And then over here, you can see that they were pretty much basing under, or right around 10, 980s and 10. So there was a nice opportunity. I traded this parabolic and then covered into the VWAP level. But then, you know, at that point, let's let this thing kind of squeeze out. And so I think the most important levels to look at, let me just go to the daily or the intraday in the last breakout. And, you know, you can see that it might come into a little bit of resistance right over here in this 13, pretty much like 1350s range, 1340s, 50s. And then ideally some type of exhaustion into the 1450 level. So in that target range where this prior support becomes potential resistance, and same deal over here, this would be the target kind of zone for it to squeeze out into, exhaust out, and then I'd be looking for potential fade. So I think that what happened is a lot of people probably faded it with CEI, and then they got trapped and they decided to fight it instead of cover, and you know, had a nice breakout. So higher the better. Huge volume, which is great. Nice momentum. I think we're gonna have a great trade here. Just, you know, don't step in front of it, and remember that this thing likes to have those knee-jerk reactions. So when you get a nice opportunity like this, that's a great high edge trade, but your edge as a reactive trader is locking into that flush. And you had the same opportunity over here too, and it flushed out. But if you decided to, you know, not obey the looking left levels and I'm gonna wait, I'll see what it does, I'm gonna be patient. You don't do that. You don't do that on the front side of the moves. So anyway, higher the better. We'll see what happens there. Next section is failed follow through. CEI, you know, it's hopefully we get, you know, gap up 10, 20 cents if we're lucky. I'm not too excited about it, but higher the better, and then probably just fade off and off radar the rest of the week. For me, I don't hold stock short overnight. I'm not looking to swing trade. So, you know, maybe this turns into something where, you know, gap ups get sold off, but not really for me. After tomorrow's day. mRNA, higher the better, potential unwind. I'm still looking potentially for 270s, 280s as sort of that flush all the dip buyers out, and then potential rebound. And last couple, not a big scan. not a big scan this tonight anyway. I've been really focused on the edge. There's been a lot of shiny objects we always talk about. Everybody's always watching this one stock. This week was CEI, so there was a lot of other ones that were great opportunities while everybody was watching that one. But VYGR, killer long. This is the setup that we talk about all the time. And you saw the buyer in the tape. You saw this transitional day, 200 million shares. The next day it came back, it held a higher low. Next day it came back, it held a higher low, and then we broke over the highs. It was the perfect breakout. Got long, still long. I have about 25% left, and you can't ask for a better way to end a Friday than that breakout trade. So really nice, perfect setup, perfect opportunity. They don't always line up that nicely, but that one was fantastic. AEHR, I am fully out of the swing trade, finally. You guys know I posted it over here, right over here on the Sunday scan at 650s. I said I was joining. Same kind of thesis as VYGR type volume coming out of that consolidation. Same thing, BMRA, which I'll go over next. Maybe I sold it too soon. My goal internally was to hold it till 20 or 30, but then all of a sudden it just goes crazy and you end up losing shares. So I sold out. All the rest mid-high 18s. I didn't make it till 19. Hopefully we get a gap up over 20, some type of short opportunity back to the 18s, and then I'll be looking for dips. In a perfect world, it comes back and fills this gap, but I'm not counting on it. Last couple, BMRA, currently positioned long. I've been selling off into the 7s. We had a little bit of a warning shot this day. It went to 7s and then sat all the way back out, back down. The next couple days it came up to 7, so I remembered that they can pull the bids at any time. So I've been locking into the 7s, buying the dips. You can see that there's been a buyer in the tape that we talk about. So if it starts to base over 7s, I would look to scale back into that position, 7, 720, 730s. Well, scale more into it. I'm trying to hold a sizable core. You guys know from last Sunday that I had bought the dip on the first day that it was trading and had a big picture idea on that one. Last but not least, no position, SYPR. I like the chart, like the action. Gonna be watching this one. You can see it's hitting a big daily resistance spot. Watch for volume. If it starts to go, great. If not, whatever. But that's about it. That's all I'm prepared for the week ahead so far. This current market, there's just been so much. When you wake up, pick the top two. Focus on 2. Don't try to trade them all. And if you're new, take the shiny objects off of radar. CEI, DATS, the stuff that's going to give you a headache if you are not necessarily not a good trader, but just if you don't obey rules well. If your goal was to flush, cover into the flush, and typically you don't, you want to see more, it's not the type of trade for you. So take the ones that everybody is watching off radar on social media. That will get you away from all those knee-jerk reaction type stuff. But that's it. I look forward to seeing a bunch of you guys in Vegas this week. And I should be able to get a Sunday scan off next weekend. It will be probably from the hotel. But either way, have a great weekend, the rest of the weekend, guys. And we'll catch you in the room tomorrow.